Welcome back everyone to the Audacious Money Witch channel, where we talk about investing and trading stocks, bonds, and crypto assets around the world. In this everything bubble of the stock market of 2024, Block Incorporated has proven to be a disappointment of sorts in 2024. On a year-to-date basis, Square has wobbled and is down by close to 6%, underperforming the market. In this video, I will talk about Q3 earnings and explain why, and is there any catalyst ahead for some decent returns. Is Block also suffering from the unescapable Cathie Wood curse, or is it just automatically blocked by Wall Street? It's like when you show up to pitch your stock, they pretend they don't even know you.
Hey, it's your dad?
Yes?
Hello? Hi.
This is the new tenant. I'm sorry, did you need something?
You acted like you didn't even know me.
So?
Or they treat you like a dang stranger just because you are pitching a Cathie Wood stock. Crazy, right? Anyways, let's talk about Q3 earnings, key metrics, even though investors like to focus on revenue trends during earnings season. In Block's case, the onus will rather be on gross profit growth, which gives a better perspective on the health of the core transactional side of the overall business. In the third quarter of 2024, gross profit grew by 19% year over year to $2.25 billion. Square generated gross profit of $932 million, up 16% year over year, and Cash App generated gross profit of $1.31 billion, up 21% year over year. Block delivered year-over-year improvement across all profitability measures in the third quarter of 2024. Net income was $284 million and adjusted EBITDA was $807 million, up 69% year-over-year. The stock initially sold off after hours as investors focused more on profitability metrics. CFO Amrita said the analysts focus more on the gross profit than revenue and pointed to the company's earnings growth and outperformance relative to expectations. Here is how the company did compared to analysts' consensus estimates. Earnings per share 88 cents adjusted versus 87 cents expected. Revenue $5.98 billion versus $6.24 billion expected. Just to point out, I was really disappointed by the revenue growth number. Just merely 6.3%. What happened? Oh yeah, if you didn't watch my last two videos, the US economy is doing completely the opposite from the stock market. The Cash App business, the company's popular mobile payment platform and a significant contributor to overall profitability, reported $1.31 billion in gross profit, a 21% year-over-year jump. Block run by Twitter co-founder Jack Dorsey said its Cash App card monthly active users increased 11% year-over-year to more than 24 million. The company said gross profit for the fourth quarter will increase 14% to $2.31 billion. Gross payment volume came in at $62.4 billion, missing analysts' estimates of $64.3 billion. However, the company has improved its cost structure. Gross profit for the fourth quarter will increase 14% to $2.31 billion, Block said. CEO Jack Dorsey devoted his quarterly shareholder letter to explaining the company's lending products, including Square Loans, Afterpay, Buy Now Pay Later, and Cash App Borrow. He said the company is looking to transform Cash App cards into a better alternative to credit cards when it launches Afterpay on Cash App Card. Amrita said that the company's lending products use artificial intelligence to enable smarter and faster decisions and to help Block manage risk and be agile in how we underwrite consumers and small businesses. She said that's helped the company maintain low loss rates around each of the different products. Those rates are about 1% on buy now, pay later, 3% on Cash App, Borrow, and 4% on Square loans. Lending is the primary driver for future Cash App user monetization, said Kennedy, an analyst. Outside of financial services, Kennedy said Cash App could help Block develop an advertising business and charge merchants for promotional pricing or brand placement. As part of its cost-cutting measures, the company said in its shareholder letter that it was scaling back its investment in Tidal, the music streaming service founded by Jay-Z, and entirely winding down TBD, the Bitcoin-focused arm of Block. The company went through layoffs early this year. Dorsey said on the earnings call that when it comes to Bitcoin, the company is focused on making it more accessible, which it does through Cash App. Additionally, Block holds Bitcoin on its balance sheet. The company said it had 8,300 Bitcoins at the end of the quarter, which is currently worth about $630 million. Within Cash App, one of the more exciting products to keep an eye on is Cash App Borrow, which is more like a convenient short-term working capital loan for retail clients, typically $100 and less than a month in duration. In Q2, Cash App Borrow saw a tremendous spike of 3x in total originations, highlighting the underlying popularity of this product and also serving as a useful fill-up to the monetization rate. Within Cash App, one metric that didn't fare particularly well was the growth in actives. But we would expect this to see an uplift in Q3 on account of the June launch of App Card Spending Insights, which is designed to give the actives a more comprehensive perspective of their spending patterns and help them make better financial decisions. What does the medium-term outlook and the valuation picture look like? One of the other key reasons to turn more constructive on Square is its ongoing efforts in cleaning up the expense base, which will help it engender better operating leverage over time and facilitate much healthier EBITDA growth. The CFO has been on record stating that they've implemented a workforce cap of 12,000 employees. Meanwhile, reports last week suggest that the Tidal workforce will be cut by 1/4, even as efficiencies continue to be pursued in other areas such as real estate, software, cloud fees, etc. For the uninitiated, Square has a goal of hitting the Rule of 40, the aggregate of gross profit growth and adjusted operating margin by 2026, but don't be surprised to see it get there ahead of schedule. If we may refresh investors' minds, during the Q2 event, Square had already lifted its fiscal year 24 target from the previous levels of 32% GP growth and adjusted operating margin to 35%. It's also fair to say that Square stock isn't meant for the faint-hearted, particularly on account of its heightened exposure to the crypto markets. As of H1 24, Bitcoin-related revenue accounted for 44% of the total group revenue. So is Block a good buy now? Firstly, Square's monthly chart, which captures the price movements over the last 2.5 years, suggests that it has been performing something similar to an ascending triangle pattern, which is innately a breakout pattern characterized by a flat resistance and higher lows. Note that the price is yet to reach the potential breakout resistance zone, so it gives prospective investors some elbow room to not get trapped right at the top. If the breakout fails to materialize, then if one drills down to the lower time frame daily chart, it appears that Square has been forming a bull flag since the turn of October, with the second leg of a pullback currently underway. Meanwhile, it is also encouraging to note that the stock is trading above its 50 and 200-day moving averages, with a potential golden cross catalyst coming soon. Investors may also be interested to note that the trend seen since the September lows has also been supported by the institutional segment, which reflects well on the quality of the trend. The stock will also likely get further support from a ramp up in buyback momentum as Square gets closer to the Rule of 40 target. What you'll also see is a much higher of cash conversion, with operating cash flow per quarter already at record highs of over $500 million. Meanwhile, if you're big on the conception of mean reversion in the markets like we are, then you'd like to know that the Square stock represents one of the promising bets for those covering the NASDAQ. As things stand, the current relative strength of Block over the NASDAQ is roughly only half as much as long-term average, offering some scope for normalization. What you must know is when we finally break out, it's going to be an unstoppable surge, and we are not going back.
Your openness to being willing to let people take self-custody is what gives the entire ecosystem a certain ethical, moral superiority against alternative investments or alternative assets. And from my point of view, it's what allows me to think out 100 years and think this has the ethical. Yes. The ethical and the moral superiority that makes it durable for a century. And I don't feel that way about other forms of digital securities or the like.
Exactly. It's predictable. It's deliberate and it's predictable. I mean, Bitcoin gets a lot of knocks, especially in the mainstream media, the technology mainstream media versus Ethereum in terms of speed of development. Ethereum moves very, very fast in comparison. But it's a question of, what is the ultimate outcome of those moves? Bitcoin is very deliberate about what goes in and what stays out. And that does mean it's slower, but those slower things tend to last. And they tend to be a whole lot more predictable in terms of the direction they're going. They tend to be a lot more secure. They tend to have far better uptime and usability than anything else. And that's not to say that there's a ton of great ideas in the sandbox everywhere and happening in all these other projects. They're great sandboxes that will test ideas very, very quickly. But that deliberateness is what makes Bitcoin, to me, the potential for this internet's native currency and gives so much confidence as a business owner, as someone running one of these companies, that it's going to stick around and it's going to serve billions of people throughout decades.